Hi there, I'm Andrew Macken and welcome to this week's edition of Video Insight. As many of you will no doubt be aware, we at Montgomery are launching the Montaka Global Access Fund this month. This is a vehicle through which retail investors with a minimum investment of $50,000 can access the Montaka Global Fund, which was originally only open to wholesale investors. So what is Montaka? Well, Montaka is our global equity long-short strategy. Now, this idea of a long-short strategy can sometimes be a bit confusing, so it's worth spending some time on this to better understand what we are talking about. Let's first consider a fund that we know well, say the Montgomery Fund. Now, as you know, this fund typically owns 20 to 40 high-quality, undervalued businesses listed in Australia and New Zealand, and it often holds cash in the portfolio as well. In our business, owning a stock is also known as going long. Hence, the Montgomery Fund is known as a long-only equity fund. Now, Montaka is also an equity fund. However, it has a number of important differences to a fund like the Montgomery Fund. The first is that it is global, so it can invest in any stock listed in any country around the world. The second difference is that Montaka has the ability to hold an additional portfolio that is unavailable to long-only funds. So while Montaka holds a long portfolio of high-quality, undervalued businesses and some cash, a construct that is similar to our long-only funds, it also holds what is known as a short portfolio, which is a portfolio of stocks sold, and this is something that is not available to long-only funds. Now, in the short portfolio, we identify businesses that are deteriorating and overvalued and that we believe are going to fall in price. By selling today and buying back in the future, we make a profit if the stock price falls in the interim. Now, the addition of this extra portfolio in Montaka should be good news if you believe in our stock picking abilities, because we have essentially created a whole new dimension along which we can add value to our clients through superior stock selection. But there is one other benefit that is a little more subtle. In Montaka, the long and the short portfolios serve to offset each other to an extent. Now, what I mean here is that when the market suddenly drops, for example, Montaka should fare a lot better than a typical long-only fund. The reason is that the profits from the short portfolio will help offset the losses in the long portfolio in this example. So from this perspective, we say that Montaka actually carries less market risk than a typical long-only fund. In the business, this is actually known as reducing the net market exposure of the overall portfolio. In fact, internally here at Montgomery, we have informally been calling the Montaka Fund the Downside Protection Fund. So that's it for today. Let me just briefly recap. So Montaka is a global equity long-short fund, and there are two key benefits to this dual long-short portfolio construct. The first is that it gives us, as the investment manager, greater scope to add value to clients through our superior stock selection. And the second is that it enhances downside protection by reducing the net market exposure of the overall portfolio. I hope that's been helpful, and if you have any further questions or would like to learn more, please feel free to call us here on 02 8046 5000.